You have called it the $100 billion Facebook train wreck, Dennis Berman.
Well, look, Evan. If you think about the numbers of people, the percentages of the shares held by the insiders and what they're selling, the numbers that we saw today.
These are smart people, aren't they?
They're smart people. Hey, they have to diversify, Evan. We don't want risk, portfolio
I
risk.
think Kate here has a chart of some of the sellers are.
Yeah.
I don't like the idea of being across the table from any of these people.
No.
And I
no.
certainly wouldn't be a buyer if they were selling. So we have Goldman Sachs. You got that chart,
Goldman
Kate?
Sachs. Oh, we have.
Peter
there we go.
Thiel.
Up to 28.
Okay, there you go. Excel Partners, Peter Thiel, DST Global, who bought into this. They bought any kind of internet company that was standing. I mean, do you want to be on the other side of the table if all these people are selling?
No.
And if they're selling that much?
No, I don't. And
Okay.
you know, it's like this we haven't understood yet, but it's a question I'd like to know the answer to. The excess demand that's come in the last few days from Facebook, is it coming from institutions or is it coming from retail? My gut,
Just
Evan,
a gut.
Just a gut. You got a gut too. I'd say it's coming from retail.
Right.
And when they probably saw the orders come in, they said, "All right, guys, do you want to ante up or not?" Now, you know, a good comparison is what percentage of insider share sales came in other IPOs. In Google, I think it was around 28%, a little over a quarter.
Most of the money was actually, I think, for primary equity. It was for the company originally.
Carlyle, I think, is zero, though they took a big dividend out beforehand.
Let's go. I want to touch on this issue that you're getting. Go to the chart that shows large IPOs, Kate. I want to show what is so interesting, I think, about this deal, and go to the other one, the U.S. one as well. What is so interesting is, you know, there's the greater fool theory of investing, which means that there's always, especially for a hot, frenzied IPO, there'll always be somebody else dumber out there to buy. What is so interesting about Facebook is that you're talking about a huge potential offering here, $15 billion,
It's really
$16
stunning.
billion.
Look, just looking at that bar chart, like what does UPS do for this country? Actually, a heck of a lot of good. You know?
Okay, well, like I don't want to get into the
No, but I'm
arguments
saying-
of the merits
social
of
utility
Facebook.
or so-
Okay,
but go
my
on.
point is simply, you have to have a huge amount of demand to soak up $15 or $16 billion worth of stock.
That's right.
That is buying simply on the greater fool theory of investing.
And yet,
without the numbers underpinning this, that's a huge deal, a huge amount of stock to be placed.
And yet, would you not be surprised if the stock was up 15 to 20% yesterday? Or sorry, tomorrow.
No, I wouldn't be surprised. It would be Friday. I wouldn't be surprised. However, you know, there's the potential here for it to be, in your terms, a train wreck, because there is so much stock that they're trying to put out there that it won't take that much for it to sell off.
And let's wait for the lockups to come off on other shares held by employees.
Oh yeah, but that's
I know, but that's the way. I mean, the train wreck might not happen on the first day. I don't think it'll happen on the first day. I'm talking about 6 months, 9 months down the line. Oh, and let's see what happens perhaps when the numbers come in a little light. You know, just a few cents below expectations. Oh, you know, growth is good. Growth is good, but growth isn't great.
As I was talking about with Rolf, the ad revenues didn't even grow quarter over quarter, and there could be some seasonal effect. But you're not talking about a company that's grown its revenues 100% year over year anymore.
No, and what's going to be a fascinating clash is the need to monetize versus the need to keep its users relatively engaged and not irked.
Right.
And we're going to see, we have a story coming out in the Journal soon that really looks at how Facebook might try to turn the levers, turn the knobs to get more money flowing through it, and that might just hurt the actual experience on Facebook.
Right. Now, let's just touch on Facebook itself. Okay, you are a Facebook user, correct?
Mildly.
Have you ever clicked on the advertising?
No.
Would you consider yourself to be an active Facebook user?
I would say relatively passive, not very active.
Relatively passive.
That's
Why
correct.
are you on it?
Because one just has to understand what's happening in this world today. One can't bury one's head in books.
Well, funny you should say that, Dennis, and looking at me as you are, because you know I bury my head in books and old movies.
I know.
And my head is very happy buried.